Or if we flip it around to you, you're probably just Donald ducking it around the house with a t-shirt and no bottoms. Which, by the way, comment down below if you're that person, because I just don't get that. You might as well be wearing a nightgown. What's wrong with you? One of the hottest stocks just announced a massive split. And yes, of course, I'm talking about Tesla. And it's going forward with a 5-for-1 split alongside Apple at the same time. So what is going to happen to Tesla now after the split, and how should you be trading it? In today's video, we're going to be going over just that, so hit that like button and let's get into it. By the way, I've also had a lot of questions as to what will happen to fractional shares, and I have the answer for you as well, so make sure you're sticking around to the end of the video to get that answer. But first, what is happening to Tesla and this stock split? And what's going to be happening with the stock itself? Well, last night, the electric car maker announced a 5-for-1 stock split. This means that shareholders of record date of August 21st will receive an additional 4 shares for each stock held. Trading on a split-adjusted basis will begin on August 31st. Now, this can be confusing to a lot of people, so let me break this down a little bit for you. The day in which companies announce a stock split is known as simply as the announcement date. In Tesla's case, this was yesterday, August 11th, and then they came out with what's called a record date and effective date. The definition of record date is an important date when it comes to accounting, but it isn't all that important for investors like you and me to know. The record date is when existing shareholders need to own the stock in order to be eligible to receive new shares created by a stock split. To simplify this, if you buy after the record date but before the split is effective, you will still be entitled to receive new shares when the split takes effect. So no need to fear out on missing out on shares as long as you own something before the stock splits on the 31st, which is the effective date. Same thing goes for Apple stock, in case you were wondering. Their record date will be on August 24th, and the effective date is also on the 31st. So you'll need to own shares before the effective date to gain any benefit from the split. Which kind of begs the next question here. Is there a benefit to owning the stock before the split, or is it just worth waiting till after? The answer? Well, it's really all speculative. The reason companies go through with this split has everything to do with optics, and that's pretty much it. Apple is moving forward with a 4-to-1 split, which means before the 31st, if the price remains right around where it's at right now, or around $450 a share as of this recording, then the stock will change to about $112 a share after the 31st. Now, because Tesla is moving forward with a 5-to-1 split and is currently priced around $1,500 a share as of this recording, the price should be around $300 a share as long as everything stays the same. Which brings up another question. What will happen to your existing shares after the effective date? Well, let's just say that you currently own 1 share of Tesla right now and you don't add any more to it before the split. After the effective date, you will then have 5 shares of Tesla with the price of the stock around $300 a share, as we discussed earlier, hence why it's called a 5-for-1 split. If you own options contracts, the same thing will take place. Option contracts adjust when things such as stock splits happen like everything else. There is no risk to call option holders here and no additional potential for profit for put options owners either. A call option is the right to buy a stock for a fixed price, in case you guys weren't aware. The right to buy Tesla stock for around $13.70 on September 18th, for example, will cost you about $118 or about 8% of the current stock price. But Tesla stock will be trading for roughly around $300 a share at the end of August, again, as long as everything relatively stays the same when the 5-for-1 split takes place. The same kind of situation goes for put options here. The right to sell Tesla stock for $13.70 on September 18th costs about $117 as of this recording. Wouldn't that be nice if there was no adjustment on that put option, right? Hey, Steve, can I get a hell yeah? Thanks, man. Again, to be perfectly clear, this does not change anything about the value of the company. Whether it's Tesla, Apple, or otherwise, the value of the company and the value of your position remains unchanged. It's all about making it look more attractive to buyers. Let's put it this way. Imagine right now that Tesla is like a girl with no makeup on. Y'all just chilling around the house. She's still beautiful, of course, but, no reason to get all dressed up. Or if we flip it around to you, you're probably just Donald ducking it around the house with a t-shirt and no bottoms. Which, by the way, comment down below if you're that person, because I just don't get that. You might as well be wearing a nightgown. What's wrong with you? Anyway, y'all decide to go out one night, and now your girl throws on a sexy dress, gets on that foundation, bronzer, and mascara wings are on point, and she's ready to hit the town. Meanwhile, you're probably still in that t-shirt and finally decide to put some pants on, but I digress. The point is that she's that same ride or die that you're hanging out with in sweats and no makeup, but after getting all dressed up, everyone else that sees her when you all go out are going to be like, how the hell did Donald Duck over here get hooked up with her? And that's essentially the purpose of a split. Nothing changes for you, but everyone on the outside looking in is like, damn! And this begs probably the biggest question of them all, which is, should you buy before or after the split? Many people ask this question because they want to try and own as many shares as they can and don't want to miss the boat one way or the other. And really, it doesn't matter one way or the other because the value of your position really won't change. Repeat after me. The value of my position will not change. Click the join button to be a part of the Chaos crew. All right, well, I just put that in there, but seriously, click the join button. If your position is valued at $10,000 before, it will be valued at $10,000 after. Now, you can speculate what may happen here, and what happens pretty often is that there is a run into the split because those who can afford to buy up a bunch of shares want to be in before the split happens and before those who find Tesla more attractive start buying it up. If that's something that you think could or would happen, then yes, you want to make sure that you have some shares before the split. If that theory is that people are going to try to rush and grab up as many cheap shares as they can. If that doesn't really matter to you and you would rather wait just to scoop up some cheaper shares, then just wait post-split. It really isn't that big of a deal in the grand scheme of things. In my opinion, Tesla and Apple are only going up no matter what. So just buy it. Don't worry about it. Look at it in 30 years from now and thank me when you do. Now, for those of you who have fractional shares, I did make some calls. It seems as if most brokerages are going to be selling those for you if you do nothing, and you will then have to buy back into Tesla after the split. Now, that was the word I got from Charles Schwab, but if you have further questions about your fractional shares, then I would call your broker just to confirm. But let me know what you think about this in the comments. Are you in the camp of those who want to be in before the split, or are you just going to wait until the perceived value of Tesla is cheaper? Also, if you happen to miss my top stocks to buy this week, click this video here. Please like and subscribe. And as always, folks, I will see you all before the bell, and B. Smith is out.